In today's video, we're talking about the different withdrawal options that you have inside the TSP. Let's go over it next. Hey, this is Mel Stubbs. I'm a financial planner at Christy Capital Management, where we're helping federal employees plan and execute better retirements. If you need help, click right up here. Talk to an advisor. Today, we're talking about distribution options from inside the TSP. There are 3 basic distribution options using the TSP. If you'll see here on the tsp.gov website, there are installment payments that can be set up monthly, quarterly, or annually, or you can do a fixed dollar amount, or you can set up based on your life expectancy. You can set up the withdrawal amount that suits you through the TSP. You also can do a partial or a total distribution. If you're 59 and a half and you're still working, you can move your entire balance out as a distribution. The distribution may be sending money to your checking account for you to go buy something. It may be rolling it over to an IRA, but you can do a partial or a total distribution. The one reason we use the partial a good bit is if you're retiring under the age of 59 and a half. If you do that, it's wise planning to leave some money back in the TSP. The TSP and IRAs have different rules as it relates to the 59 and a half age. If you make a distribution from an IRA, and let's say you're 58 years old, there'll be a 10% penalty. If you make a distribution from the TSP at 58 years old and you're retired, then there's no 10% penalty. So lots of people that we're working with will actually do the partial distribution, move money out to an IRA for us to help them, for us to set up some other accounts, other investments, that type stuff. But we leave money in the TSP just in case they need to take a distribution prior to the age of 59 and a half. Once you reach the age of 59 and a half, then there's no difference between the rules of an IRA or the TSP. The total distribution would be removing the entire account after retirement, and the TSP account would close down. You'll also see that there's an annuity purchase. So a life annuity is not like your TSP account. When you purchase a life annuity, you are giving control of your money up in exchange for a lifetime monthly premium from the TSP annuity provider. So you can see it right here on the fact sheet that you're giving up control in exchange for a lifetime payment. So exactly how much would the payment be? Well, that depends on the options that you pick. You can see here that there's a single life annuity with level or increasing payments. A single life means it's only going to last for the TSP owner's life. There's a joint life annuity with your spouse with level or increasing payments. There's a joint life annuity with someone other than your spouse. Depending on the payment option you pick will determine how much your payment actually is. The more of a survivor benefit type option you pick, the less your payment is going to be. What gets murky is what happens to the balance when you die. So they do have a cash refund feature, which means the remaining amount that has not been paid out in monthly payments would go to your beneficiaries in a lump sum. Of course, adding this feature will lower the payment that you get. There's also a 10-year certain option where they're going to pay out payments for a 10-year period. And if you die within the 10 years, payments are going to continue to your beneficiary for a 10-year period. All of these extra options cost you money in the fact that they're going to lower the monthly payment that you're going to receive every month because of it. There are 18 choices in all that you can pick from. If you look here on important reminders, annuity purchasers, it's irrevocable and changes cannot be made once the annuity is purchased. You're exchanging the balance for a guaranteed payment. What we found is that most federal employees, they're going to have a guaranteed first pension. You're going to have a guaranteed Social Security. If you're married, you're going to have another guaranteed Social Security. So for most federal employees, getting another guaranteed check is not fixing a problem that they really have. If you want to have control and flexibility where you can access your balance in any amount that you want, then you may not want to go with the annuity option. Here on the website, it says TSP has a programming issue that is preventing some participants from setting up installment payments in the amount they desire. Here on the website, it says that TSP is having a programming issue that is preventing some participants from setting up installment payments in the amount they desire. We're in the process of addressing that issue. So that's less than ideal. I was actually on a Zoom meeting with somebody looking at their TSP. We were trying to set up that monthly payment. We struggled. We couldn't do it. I've seen some comments on the FedSmith articles I wrote where a TSP participant says that they could not change a monthly payment once they set it up. They even called TSP and could not get it changed. I think TSP is supposedly working on this issue, but again, if that's true, that is less than ideal. Another thing about these distribution options is the TSP limits you to doing one per month. Once per month sounds like a lot of access to your money, but we've had several times where clients wanted to take an additional distribution and were not able to do so because they got to wait 30 days. So the TSP has gone a long way in making access to the TSP money better than it used to be. But there are still some limitations. If you want to have full access to your money, then you may want to transfer your money out into an IRA or a Roth IRA. IRA stands for Individual Retirement Account, where you have control and flexibility to decide the investments that you want, to decide how much access you want, and just to have a little more control on what you're doing. If you see the value in having that control and you need help doing it, then it's also an option to move your money into an IRA and get help with this. The TSP does not have financial planners on staff to help plan for your retirement and how to best achieve it. That is something that you'll have to move your money out of the TSP to get. So whether you move your money out of the TSP or you leave it in the TSP, there's a strategy you need to think over. In this video right here, it's all about strategy. What's your strategy for? You fill in the blank. What's your strategy for Social Security, for RMDs, for future tax changes? What is your strategy for all these different things? Watch this video, get some help on that. My name's Mel Stubbs. See you next time.